And welcome back to the Daily Wrap. A bad day in the stock market as the Dow gives up 500 points following an already difficult week. With the market now officially entering into correction territory, falling 10% from its May 19th high, investors are feeling a bit of a case of nerves. Now, while many market professionals suspect that the sell-off is the result of investor concerns over slowing growth around the world, others fear that the failing economic conditions in China could be responsible for the worsening fortunes of our own markets. Meanwhile, still others believe that the confusing signals coming out of the Federal Reserve with respect to if and when they will raise interest rates may be to blame. So is this a temporary bump in the market that will continue its upward trajectory, or are things about to fall apart in a serious way for our 401k plans, Joe Concha?
Well, we're in a global economy right now. What happens in China affects us more than ever before. The fact that oil is at under $40 as well.
We're going to talk about that. That's a fascinating issue.
Oh, please. Then
no, we'll get to it at the end. So.
Okay.
Carry on.
Because you're friends with everybody in big oil. So
I figured
that's that.
Friends.
But the bottom line is everything is intertwined now. And with China, with us owing them so much money, if they're in trouble, we're in trouble. And that's why the street reacted that way.
You would come down on this is probably a reaction to the China situation.
That, and look, it's 4 years since the last correction, which was in 2011. These things just happen. It's all cyclical. We're seeing it right now.
Naomi.
Why did it happen today and not
it's actually been happening all week. I mean, we had a couple hundred off yesterday. Today it took, you go down over 500, you get people's attention. The question is, and I said this in our opening, what people do tend to forget, because people get a little short term about this, those of us who remember 2008 and how chilling that was when we saw the market drop 800 points one day, people forget that at its low, it went down to, I think, the low to the middle 8,000s. So today we're seeing something like that happen again, but guess what? It's dropping into the 16,000s, which means it went up all that way in that time. So do people get carried away with this and forget that the stock market always goes up in the long term?
Right. What will be the new norm? I mean, if we're having these spikes and these dips every couple of years, what is the new norm of 2015?
Yeah, I don't think there is a new norm, Jonathan.
I know I tried my time in stocks when I was in the military. I learned my lesson that I don't know enough to get into stocks. But I'll tell you, it's hard for me to understand the ebb and flow of the stock market, kind of like you're talking. There's been so many things that have caused me to pause and say, what's going on in this world? And since this is a global economy, I'm not sure what caused it to happen now. And that's the interesting thing about the stock market.
To be fair.
Yeah.
But it's a fair question. So much of what moves our markets is the result of confidence, which takes us to the CBOE Volatility Index, measuring the amount of fear that's existing in the market. Experts suggest that when this number trades over 20, investors should begin paying attention. And when that number goes over 25, it's an indication that there is true fear out there. Right now, that number is trading between 23 and 24. So a quick question, Joe, will you be calling your broker with a sell order when we get out of the studio tonight, or will you be buying on the dip?
Always buying the dip.
That's a smart man.
Right?
Naomi?
I'm a millennial. I have cash under my mattress.
That's absolutely
That's the future economy.
How did the millennials become like my grandparents?
I know.
It's called, we don't have jobs, you can't get credit.
Warren Buffett does that. He buys when if it goes down a certain amount or if it goes up a certain amount.
The right answer, but we're not giving investment advice here. We can't do that. The right answer is it's a fire sale, folks. You don't worry that when the sweater is reduced 50%, you don't go, oh, there's something wrong with the sweater. You buy it if you like the sweater. Guys, the stock market always comes back. Buy on those dips. Now, one of the things driving the market downwards is the seriously low price of oil that Joe brought up. Why is it that we are unhappy when the price of oil is high because gasoline costs us too much, but then we're also unhappy when it's low because it apparently impacts badly on the economy and the market? What's up with that? We are never happy with oil prices. What's the deal? What's wrong with
benefits?
No, exactly.
Right?
Depends on who you're asking.
Which raises a question. That's exactly right. Why don't Americans get smart and hedge it? because we know that when the price is low, it may not be good for the economy, but it's good for your gas tank. And when the price is high, it's bad for your gas tank, good for the economy. So if you have a car and you buy gasoline, why don't you own oil stocks?
Isn't there a new company that actually hedges your individual oil? Does anybody know
Makes
anything about
sense
this?
if there
There's
is.
a new revolutionary, like,
Because this
how
way,
to
if you're
purchase
paying
gas.
too much at the
Right.
gas pump because the prices are high, guess what? You're getting your money back in the stock market because the oil stock is high.
How is it that when the gas prices go up, that it's good for the economy? How is that the case when oil prices go up?
Well,
that it's
that's
good for the
what's
economy.
so confusing.
It doesn't make any sense. You think
Well, no,
lower,
it's because the theory is if oil prices are up, it's because there's not enough oil to go around, which means that the economies are humming.
Interesting.
You see?
Right.
So, but the answer is hedge it, folks. Own oil stocks if you buy gasoline.
You just said we can't give advice on this show.
I didn't give advice. I'm speaking to my friends right here on the panel. Are you concerned about the stock market right now? If you are, go to newsmaxtv.com/comments and let us know. Coming up next, you know what time it is. We're going to read some of your viewer comments. Don't go anywhere. I'm sure someone's coming for me.